Go.
Streaming from South Africa to the world. This is the Stonks Go Moon podcast. What just happened? We break it down so you don't have to.
Welcome everyone to the Stonks Go Moon podcast. My guest, very special guest today. I tried very hard to get him on the show. Eventually, never give up. Welcome, Vic Aggarwal from Vikinsa Capital Management. How are you?
Thanks for inviting me here. It's an opportunity. I cannot miss it. Thanks for being here.
Let's dive straight into it. Gold. Such a there's two camps, right? You're either it seems to me you're either in Bitcoin or you're either in commodities, gold, silver. We don't have a choice. So you're split down the middle, right? I want to speak about gold today. There is a lot of narratives. There is one that we're in a commodity super cycle. There is one that we are sort of in a transitory period. But whenever I speak about gold, people get very offended very quickly because I speak about the rotational movement of gold through the levels from the all-time high 2000 down 900, 1900, 1800, 1700 where it found support, and then the rotation up 1800, 19. It's not rocket science, but then people start, no, it's not technical analysis, it's fear. Gold is driven by fear. Or the other one that I heard the other day is, no, it's the energy of the universe, Vic. So let's stand still and talk to me about your recent analysis on the gold price, because I know you're very accurate, and speak to me specifically about the technicals. What exactly happened and where are we now?
Right. So instead of actually going to technicals, let me actually take the fundamental side.
Yeah, sure.
I'm not a fundamentals guy, right? At all, right? I rarely look into any fundamentals. The reason behind that is because I think, and that is just my opinion again. There is absolutely
we just
no.
lost half of our listeners. Not joking.
It's just my opinion. I think there is absolutely no one who can look at the fundamentals and quantify them, and make proper trade decisions. But that's just me. So for me, technical analysis is the best one, so I stick to that. But there is only one fundamental that I follow on gold is history is on our side. The gold has always been bullish, and it will always be bullish. There will be market cycles, as you said, it can go up and down, whatever, and we can map that, using technical analysis and all that, right? So that's what we have been doing, right? In terms of my technical analysis, the last year, we saw a huge movement in gold, right? Whether it was Corona or it was building up already. Because if you look at the yearly time frame, most of the traders, they look at smaller time frames, such as 4 hour or daily or something like that. Go and check out the yearly time frame or monthly time frame. You'll see that that momentum has already been building up since 2012, I think, or 2013 or something like that. It went down a little bit and then started to build up. So I think towards in 2020, it just picked up the momentum. Now that yearly candle has showed me a lot of momentum, right? It was showing me that, okay, fine, gold is found a momentum. It's just the time frame that is different. If you're looking at yearly time frame, now usually in technical analysis, the next candle usually tries to follow the same momentum because the momentum has not died out. So it could actually take a little bit of dip. So from 2070 level, I thought, okay, fine, I can see a pattern there, a W pattern, which I can quantify. So I can take a short, which can lead to 1680 level or so, which is a good Fibonacci level for me. I use Fibonacci for my analysis. So I'll go short until then. And from there, market may resume its, again, bullish momentum because market is always trying to look for, resuming the previous momentum. So from 1680 level, I changed my bias again towards the bullish side. Now, there is a specific bear case for gold as well. But for now, since 1681, it has been going up. And I think it will continue to go up. I've been expecting, to be very honest, I've been expecting some correction to it, last week and week before, but it hasn't come in. That shows that, it can actually go into kind of a parabolic move as well, right? If the market starts to pick up. So that's what we have.
That's a very interesting point. I mean, I think you raised a couple of interesting points is look at the longer term time frames. Your longer term time frame gives guidance because gold did go parabolic. But also, don't fight momentum, right? if you're on an all-time high and you're starting to lose momentum, don't climb in now. Where were you at the bottom going, top, and why are you shorting when you are at the bottom?
So we like, obviously you should not be shorting when it is at the bottom, right? So so we were looking for a buy, right? When, like, because the entire thing is about the psychology, like, the market participant psychology. When it is too high, everybody will be like, majority of the traders will be thinking it's too high right now, right? So let's start booking some profit. So it's just going to fall down.
Yes.
But again, the previous momentum has been very, very bullish. So at some point in time, it will try to resume the previous momentum, hence the buy. Right.
Yes.
Now,
because of the generational aspect of gold.
Yeah. Yeah, kind of both as well, I guess.
Yeah.
So the market, when it starts to go up, now it is kind of like, going up, but you cannot say right now, just looking at the chart, whether it will continue to go up. There'll be a lot of, like, speculations right now that it will start going to, like, 3,000 or 5,000 or whatever. I mean, it can, right? It has always been rising with all the market cycles. But the main thing is, like, we must trade what we see. Right, so we cannot just, like, look at gold where we are.
That brings me to my second point: is what is your favorite trading setup? The one that sort of you see it, you know it by now. I'm not saying 100% perfect, but what is the Vic trading setup? Because we all have one, right? Because it's like, oh, I see this one. Oh, I know it. Yes, because it's sort of ingrained into your brain.
Yes, the favorite setup is pretty much like, the one that I traded on gold, like, 1681, right? So I knew that it was going to go up. I didn't know, like, it was going to go all the way to 1900 or something, but I knew that 1681 was, like, the line, right?
Yes.
That's where. And the way I found it is very, very simple. All you have to do is just find like, go to the higher time frame, as I said, clean up your charts and find very important areas. I use Fibonacci. You can use anything else, but in my opinion, Fibonacci works the best. And I found, like, 38.2 Fib level was there, which is a major Fibonacci support, right? Exactly at 1681. So I knew that if monthly was going to come there will be some kind of reaction. Now, reaction can be a correction, a huge movement upwards, or it can be complete reversal as well. So who knows? So that is my perfect setup. Now, with that, I start to confluence other things in there as well. Like, I will go into deeper, like, into smaller time frames to build a case. Never trade with one thing in your mind, saying that, okay, I've got, like, this particular support, this resistance, it's going to go up. No, never do that. Always try to build a case. So I built the case around that area. Okay, this is the area, and I've got, like, near about 3 or 4 factors, like, which is going to tell me that whether it is going to go in my direction or other way. And that's it. So basically,
I completely agree with you. Something people struggle to understand is, especially novices when they start out, is confluence of time frames. Because how do you know which time frames go where, or, to be together? And I always tell people, but it comes with experience, right?
Yeah, a lot of it actually comes with experience, but there are a few guidelines, like, which everybody should follow, right? So in my opinion, everybody should, before, like, they become any kind of trader, right? They must go, like, a little bit of self-discovering journey. They must understand, based on their life commitments and everything, like, yeah, of course, whether they want to become a swing trader, a position holder, day trader, or what, right? They need to find that for themselves. So, and then based on that, they must decide on the time frames. So for example, like, if you want to be a swing trader, then I think you should be looking at yearly, monthly, weekly, and daily time frame, and maybe like, executing on 4-hour time frame or something like that, right?
Yes.
Because that is going to be like, a swing trading style.
That's
if you're a day trader, day trader, then you should be looking at, like, maybe starting a daily time frame, 4-hour time frame, 1-hour time frame, and then bring that down and bring that analysis down to 15 minutes or 30 minutes where you can execute, right? So you should always be doing multi-time frame analysis. One of the important reasons behind that is it gives you a lot of pre-planning, because if you find a level, which is level or any kind of area of confluence or anything, which is there on higher time frame, that is obviously going to be of higher, like, priority or higher, like, strength. Let's say there is a 200 moving average on 4-hour time frame. That is going to have a lot of strength as compared to anything which is there on 5 minutes, right? So if you find that thing in there on higher time frame and start to plan your trades around that area, that will give you a better win rate.
So just to clarify confluence for people that maybe don't know, it's when there is a significant point or level on a higher time frame that corresponds to a specific level on a lower time frame.
Yes. So what you do is you find your opportunity on higher time frame.
Yes.
So I'll give you an example, and specific example. So for example, if I go to, I want to be a day trader, right? So let's say my higher time frame is going to be 4-hour time frame, right? So I will go and check out my higher time frames. First of all, for example, let's take an example of gold, right? So I'll clean up my chart, go to a 4-hour time frame, and I'll try to find something which has a potential to interrupt the flow of the market. Yes. Right. So if the market, market can go there and reverse from there, or at least take a little pause. Right. So these are those levels where the market can reach to, because they are always looking for these kind of areas, right? Psychological numbers, moving averages, pivots, Fibonacci levels. Okay. Now you mark that, you go to the 1-hour time frame, you repeat the process. You see, if anything which is there on 1 hour confluences with the one that you found on 4-hour time frame. Okay, now repeat the process on 15 minutes. Now, once you have done that, you will have a solid zone. That's what I call as confluence zone.
Yes.
Right? And now all you have to do is just wait. You wait on your execution time frame, such as 5 minutes or 15 minutes, whatever, right? And as market reaches that level, you say, okay, in your mind, you are always saying that if and when market reaches there, and if I get this sort of confirmation, then I'll book a trade. Otherwise, I don't.
And if there's no confluence, you walk away.
You let it go. You walk away. Exactly, because that one of the mantras that I always keep on repeating is missing is better than losing. So just walk away. There is never shortage of opportunity.
Your other favorite mantra of mine is the one that I still have to print on a T-shirt. By the way, it's that charts are the ultimate truth. Right? Yeah, that's one thing that you started at the sort of I call it at the start of the year. And I want to find out, why do you say that? And do you think it will continue to be that way?
Yeah, I think it will, right? The reason behind that is when I was struggling to be a trader, the only difference that I found...
As we all, that's a journey.
Everybody has gone through the same kind of journey, because and they have to, I think it's part of the learning process as well.
True.
So the main thing was when I realized there was only one difference between winning and losing trader, right? 80% and 20%, everybody has thought about, and that's the mindset. So what you have to do is just create few mantras, collect few mantras, or just realize few things and remember them, or maybe remind yourselves every day. So I have got a list of 12 mantras that I follow every day, near about every day.
That's a lot of T-shirts.
Yeah, that's a lot of T-shirts. So the one that you mentioned is one of them. So what I say is charts never lie. The reason behind that is because whatever has happened in the market, or whatever is going to happen, that is available to you in the free form. You don't have to pay for anything, right? It's just for free. Everything is for free for the market in the market right now.
Yes.
So so it shows all the psychology, all the buys, all the sells, everything is there on the chart. So whatever any blogger said, any writer said, a news media outlet said, CNBC said, or whatever, whoever said whatever, right? It doesn't matter, because the ultimate truth is the chart. Chart is telling you what exactly has happened, and if you spend a little bit of time in analyzing the chart, learn how to do the technical analysis, you can also implement you can predict a little bit with certain probability. There is no certainty.
I was about to say with a certain probability. Yes,
certain probability. You can say that, okay, fine, if this is doing something like this, then there is a good chance that it will do this. Now it cannot get better than that. It's that's the purest form of the truth that you can have, right? Because if you read any blogs or anything, then they might be selling you whatever, right? And it could be their own version of, or their own interpretation of this stuff. So
I completely agree with
the
you.
best thing is to rely on the charts, rely on technical analysis, build your skill. That's it.
Vic, before I let you go, for the people that want to connect with you and Vikinsa, where can they do that? And drop us a couple of places where we can find you.
Yeah. You can find me as Vikinsa, Vikinsa, on everywhere. So that's my screen. Yeah.
Okay.
Yeah, I'm on LinkedIn. I'm on LinkedIn, YouTube, and few other places as well. So, but I'm mostly active on LinkedIn and YouTube. Search for Vikinsa.
We'll drop those links in the comments. Vic, thank you so much for joining us. To our listeners, peace, love,
thank
and
you for having me.
And we'll catch you in the next one.